Hello there, this is ETV Special Edition and I'm Sintayo Tamarat with this edition. The global finance and economic sectors are witnessing significant changes, and this dynamism is going to affect the African countries. And with this special edition, I'll try to focus on how the African countries can address this global financial dynamism that's going to affect these countries. We will also try to focus on the liberalization trends that are just happening here in Ethiopia. Thank you so much for joining us, and do stay tuned. And to give us more on these issues, I'm joined here by Jeffrey Odundo, CEO of Nairobi Securities Exchange, and Alan Lwatebe, Director of Investment Deposit Protection Fund of Uganda. Thank you again for joining me. And a very warm welcome to you, Odundo and Lwatebe.
Thank you very much.
Thank you for having us.
Happy to be here.
Well, let's start with global financial dynamism, and how is it going to affect the African continent, and how will you explain the global financial dynamism?
So thank you very much for this great opportunity. I'd like to probably lay a perspective about that question. Now, the global economy has really experienced a slowdown right from the after effects of COVID, where we had serious disruptions in supply chains, and also we had the lockdowns that really affected global trade. And so the global markets have been reeling off that. And when we thought that we were coming out of COVID, the Russia and Ukraine war started. And this again has further aggravated the economy, because those are two economies that really play a big role in terms of raw material, global supply, and trade. And that has had an aspect of impact on the economies. Now, Africa happens to be a net importer continent, and we rely a lot on importation of finished goods, especially from the global markets. And owing to the impact of what has happened globally, we are not able to export an equivalent of what we would do to minimize the balance of trade concerns. So we are actually going deeper into our reserves in order to import products, given the disruptions we are seeing globally. And this has caused a strain in the economies. So today, for instance, in Kenya, we're currently experiencing a crunch on Forex. The level of Forex has gone down, our Forex cover has gone down. The availability of Forex is not as easy as it used to be before, because we don't have sufficient dollar inflows coming to the country, because every investor has gone up. And again, the risks, the global risks, especially around the war, has affected the flow of investments. So a lot of investments are now going back into the developed markets. The U.S. Federal Reserve is increasing the Fed rates every so often. So you'd rather put your money in your own domestic bonds as opposed to bringing them into these kind of markets. And that's caused a strain. The other issues that we have is that the Euro bonds that we took, the yields have gone up, and that's causing an impact on our debt levels. Kenya currently, we are looking at about 60% debt to GDP, and the strain is getting worse. So we are seeing a great disruption in the economy, and that's affecting the local economy in a very, very big way. So the global risks are quite high, and having some really, really severe impacts on our economies.
Yeah, that's nice mentioning. And can you add some more, Lwatebe?
Yes, Jeffrey has mentioned some key points that are influencing the economics of many countries, driven by the after effects of the COVID-19 pandemic. Most countries were locked down for over 2 years. People were sent home, not able to do economic activities. Now, as we were coming through or coming from the COVID-19 pandemic and countries were opening up, we have the Russia-Ukraine war taking shape in early 2022, and that has also influenced supply chain and caused inflation for many countries down the road. Now, what we are seeing today is that inflation now is not just a problem in Africa, it's a problem in Europe and America, and we have also seen interest rates rising in Europe and America, increasing the cost of dollar financing for governments like ours. 5 years ago, a government like Rwanda, Uganda could borrow at 5% in dollar terms on the global markets. Now it will cost about 10% for the same amount of money if you wanted to borrow today. Now, if you compare with the local borrowing in your local currency, in Uganda, for 1 year, the government will pay 10% to borrow for 1 year. But if they are to borrow from an external source, it will cost them up to 8%. So the difference between borrowing externally and borrowing internally is very small. And that's a problem because for the government, it has to have an ability to finance big infrastructure. For example, if Ethiopia wanted to buy a new Airbus, where would you get money? You can't take the Ethiopian currency to Washington to buy an Airbus. You need to take dollars. But where are you going to get these dollars? You need to borrow. So those are becoming challenges that we are witnessing, and those are affecting many countries, their ability to finance externally in the international space. This has been constrained because the cost has risen significantly over the last 12 months.
Well, so as a solution, what adjustment needs these countries to make?
So what we are seeing many countries discussing is start with the liberalization story that we are having in Ethiopia today. How do you attract other sources of capital or other sources of financing that is not borrowed money? You need to be able to allow other people to bring in money to balance your books. Because for a long time, most of our governments, we are focused either on borrowing from the World Bank, IMF, and now we are trying to attract private capital to come into our local markets. So the solutions that we are seeing many countries are pursuing is to create rules, to create a framework that can attract private money, private equity, venture capital, which money can be used to finance startups, to finance innovations, small businesses, but also infrastructure. So this offers us an alternative way of financing economies in these very challenging times. But we're also seeing that there is an important role for the diaspora. There is now an emphasis on supporting the diasporas of our countries. For Uganda's case, we receive over $1 billion from the diaspora. And this is money that is not costly for us to receive, and so we are emphasizing to support the Ugandan diaspora as a source of financing as well. So these are some of the solutions that most countries can tap into to diversify their source of financing.
Just to add a couple of things. So what do you need to do to start managing that? I think I look at three things. Number one, you need to attract FDI, foreign direct investments. How do you do that? As Alan has said, you must liberalize. You must start the journey to liberalization. If you're going to bring Coca-Cola into Ethiopia, if you're going to bring Coca-Cola into East Africa to set up a big plant, or you're going to bring in Apple to set up a small telephone manufacturing industry, you have to open up, you have to give policies that favor Apple to come there. They will not just come, they want to tick certain things. And your tax policy is favorable. Is your trade policy, is your judicial system, commercial judicial system accessible? And that's why things like having International Financial Center, it would be a good area to allow them to come in. In Kenya, what we've done, we have set up what you call special economic zones and so special economic zones. And what those economic zones do, they give, if you set up an industry in that zone, you have tax incentives like for 10 years, lower discount, lower tax rates. If you're setting up if you're in EPZ, you're actually not taxed because that's an export processing zone as well. So you must have favorable conditions. The second thing is inter-Africa trade. So Africa only trades 15% with itself. So if I want to buy coffee, or not coffee, sorry, if I want to buy cocoa, instead of going to Cote d'Ivoire, I'd rather go to Switzerland and buy Nestle cocoa to come in. Why can't I go to Cote d'Ivoire and buy cocoa from Cote d'Ivoire and have like some exchange trading among ourselves? If Uganda is very good in food, a lot of us should actually go to Uganda and encourage them to do what they know best. Grow very good food, export to our markets, and we're able to also send something back. There has to be that closeness inter-Africa trade. And the third thing is value addition. You know, we are exporting raw materials. We are not doing finished goods. So you export raw materials and you buy finished goods. You know, why should you do that? We should actually be able to set up value addition, especially agro value addition processing should happen in the country. There is no point of producing, like in Kenya, we produce a lot of tea, but we export our best tea. Do you know who's the largest coffee exporter in the world right now? Germany. Germany. But Germany doesn't grow tea. They don't grow tea. So you ask yourself, how did that happen?
Processed coffee.
Processed coffee, yes. It's Germany. So you have an issue. So we need to change that dynamic and allow ourselves to do more value addition locally.
And just to top it up for me, the other thing that we're not tapping into in Africa is African pension funds. We are not seeing pension funds being drivers of capital within Africa because we have closed markets. Our local pension funds cannot invest in other countries, and other countries' pension funds cannot invest in our countries. Yet these have become the largest sources of capital. In most of Africa, the biggest funders are actually pension funds from Europe and North America, who are controlling vital assets like airports, dams. Why don't we change this story? And so reforming and attracting local African capital to come within or to work within the continent is also vital in addressing some of the challenges that we are seeing.
Well, I've met you here in Ethiopia, Addis Ababa, while attending the 6th East Africa Finance Summit. And what significance can such summits have for the finance sector development and also to challenge or withstand those global dynamisms that are going to affect the African finance sector?
Well, this is my second summit that I'm participating in, and I'm very happy that it's now grown to the 6th. What these forums do, they give you a number of things. It's a learning platform, so you're able to come in as regional players and come and have a discussion and just get to learn from each other and get experiences. So the experiential opportunity is very good. You could hear the discussions around insurance, life and health insurance, and why there's a good case for having microinsurance in Ethiopia. A lot of this is actually what we've also done in Kenya, for instance. So why not share with you our experience and help you also build that. The second thing that it does, it provides a networking opportunity. I'm so delighted to meet so many players today from Ethiopia, and I think this is how we're going to be able to expand our economies across borders. And so these platforms are so important. And the third thing that I like about these opportunities is that it encourages the sense of partnerships among countries. I think today Kenya and Ethiopia are doing a lot together. We are so happy to see our leading telecom here, Safaricom, and becoming an Ethiopian institution. Sure. And we want to see more institutions coming here and investing here. And equally, there's so many Kenyans who would like to invest in Ethiopian companies. So that these opportunities, these partnerships, this brotherhood, sisterhood is very, very encouraging with these forums.
I mean, I share the same sentiments. This is my first time coming to Addis Ababa, and so I was very delighted to be invited to speak. But I've been pleasantly surprised because I've met many Ethiopians in Kampala who are running business, operating, and growing themselves in Kampala, and it's good to see where this is coming from. And for me, attending such a summit is a good way to get a fuller understanding on the potential of the collaboration that Uganda and Ethiopia can expand. At the moment, our relationship is largely limited to Ethiopia Airlines, which is one of the major airlines at our Entebbe airport, but also having a community in Kampala. But there are so many things that we can see where the two economies can integrate and learn from each other and build from there. So a summit like the East Africa Finance Summit is a way for us to build those collaborations and partnerships, getting to know the right people who are looking for those collaborations. So it's a very important summit to have, and we are delighted to be here.
Well, so the very theme of this 6th East Africa Finance Summit is causing financial integration in East Africa. And can you tell me how capable the financial institution is in East Africa to cause the regional financial integration? So
I think our financial integration is a very good, has been something that's been going on in Africa. We believe that it's important that we use each other's comparative advantage, not competitive advantage. Comparative advantage in that, why don't we help you build what you're good at? And help us build what we are good at, and then have exchanges. If Ethiopia is a very good country in terms of leather, let me talk about leather. Your leather is amazing, one of the best industries you have. We need to learn from Ethiopia. We need to encourage that industry to grow and come through. But that can only happen if you have integration, if you have got trading relationships, financial integration, again, very important. Why would Ethiopia want to learn what's happening in London and the US? Yet, down in Kenya and Uganda, we are very well established financial institutions. Why don't you come closer home? Because we are similar people. We are one people. It's easier for you to adapt our policies than adapting policies of a market in Europe, So these are the important things about integration. It helps you reduce the length of time to the go-to-market strategy. You're shortening it than taking the prescription of a market, let's say Southeast Asia, which have a very different dynamic, and adapting that here. It will take you 10 years to implement something so simple, which was available in Uganda. So that's what I see the essence of integration, to be honest.
Yeah, I mean, there are many things we can benefit in integration. If we look at portability of our phone numbers, if I went to Kenya, I'm able to make a call in Nairobi as if I'm in Kampala at the same cost. And this has only happened because there's a harmonization between Kenyan technology, telecom rules, and Uganda's telecom rules. Things to do with investing in the capital markets. A Ugandan investing in Nairobi is considered a local. A Kenyan investing in Uganda is considered a local investor and benefits from the advantages of being a local investor.
Correct.
And so this has been expanded to cover 6 countries. So anybody from the Democratic Republic of Congo, South Sudan, Rwanda, Burundi, Kenya, Tanzania is considered a local investor when they're investing in Uganda. So this has extended the number of investors that we can have in our capital markets, but it also provided us with more opportunities for investing. For our local fund managers are able to invest in other countries at the same rules as everybody else. So these are the opportunities that can really be opened up when integration is happening across different sectors. And Geoffrey can speak to this. Our capital markets are getting more integrated.
Yeah.
If you are in Uganda and you wanted to invest on the Nairobi Stock Exchange,
yeah,
you can actually use your phone to buy a stock in Nairobi, and you don't have to be in Nairobi.
Yeah.
So there is a lot of things that can happen to enhance economic activity by bringing countries together and streamlining the rules, organizing the framework, and allowing that interconnection to happen.
Well, it would be quite significant talking about having a common regional currency, as His Excellency President Samuel Ruto recently said. And what is your take on that?
Geoffrey, you want to take that?
Yes, I do. I share the same views. Ask yourself, why would I? As the president spoke about it, he said, why would I want to buy products from Ethiopia in dollars, and you want to buy products from Kenya in dollars? Why can't you buy things in our local currency, and we buy things in your local currency? So it's a birr versus Kenya shilling, and you eliminate the exchange risk. So this it was a very good wake-up call, and possibly in the future we need one common currency. It's happening in Europe. Now we have the euro. The euro is covering almost all the European countries. You don't need to have a different currency. So there's no, that exposure isn't there. And I think that's important. However, it's a journey. And I think what today you heard about the Africa Exim Bank providing a back end that allows for currency, for exchange of currencies using what they call the pass system. Now, that's going to be a revolutionary changer, given that if you want to trade between Kenya and another country, Africa Exim Bank intermediates that. So it does a lot of currency swaps, birr for shilling, and you avoid so they have this currency warehouse that just looks at, you're buying from Ethiopia, I've got the birrs, here you are, exchange with birr to Kenya shillings, that's it. If you're buying in Kenya, it's Kenya shillings, birr. So the warehouse all the African currencies and allows that currency flow to happen, and that's going to make sense. So I'm really for it. I think we need to go that direction.
There are actually many initiatives that are in East Africa that are happening to try to harmonize and solve this problem. One of them is the East Africa payment system, where all the pilot countries, Rwanda, Tanzania, Uganda, and Kenya, within their central banks are able to receive the currency of the other country, and it's accepted for usage or for economic activity. So if you are Ugandan and you travel to Tanzania, you can take Uganda shillings and use them in Tanzania, and they will be accepted. The central bank will receive and repatriate and allow that exchange. It is a beginning framework to understand what else do we need to have in place to facilitate these interconnections. And there are also conversations around the East Africa Monetary Union as a long-term project to really harmonize and have a single currency for East Africa. So these questions are being discussed at the minister level, at the presidential level, and also with the central bank governors leading the way in guiding on the framework that will lead us to one currency. So there is a lot of things that are being done to increase the level of trade amongst East African countries. And one of the things that we are solving for is the single currency. So we are happy to extend this conversation with Ethiopia. I think this gives us a larger market to discuss the feasibility of having a single currency. And so it's an important conversation that we need to have both as peoples, but also at a political level.
So as Ethiopia is on the verge of liberalizing its finance sector, what is your take on that move by the government, including the move to stock market?
You're in a very good space. You're in a sweet spot if it comes to trying to shape your financial markets. One, because you've got all this knowledge around you. You've got experiences of what happened in Kenya, Uganda, etc. You've got all this information around you, and you're then able to avoid all the mistakes we made. So you can actually fast track your financial systems. You're able to modernize them. You don't have to use the technology we started using. You can bring them to the current technology and scale up with us. So that's the benefit. I think a lot has happened. I was very happy to hear that your banks are very established and looking at the number of branches you have and all these kind of things. So the financial system here is fairly in a good state. I think what's now remaining is to actually have it more integrated into the global financial systems and also the regional financial systems to allow for the benefits of all these innovations, fintech, microfinance loans, digital loans, so that it can now be enhanced. So I think that's really it. So my take is, it's the right time. It's the right time. We say that it can be in a very phased approach, but it's the right time. But you need the right partners. You need committed people, and I think the regional players provide you with your first cousins, if you're to use that analogy, to help you take that shift forward.
I totally agree that. If Ethiopia is looking to expand its reach into the global financial system, it's important to be able to leverage the existing technologies that are available for the international financing. And so that one of the things that they will have to do is think about the liberalization. And for me, this is why I believe it's the right opportunity for you. One, because you are looking to be more global, more visible. Beyond Ethiopian Airlines, there might be other brands that want to branch out. Your coffee is excellent, and this could be a brand that you want to really sell to the rest of Africa and the world. But to be able to support such an expansion, your banking system must have also the legs to be where the brand is going to be. What we have seen in Uganda is that banks are following customers. When Brookside was coming to Uganda to do dairy products to set up in Uganda for milk and milk products, KCB as a bank and NC Bank also followed where the customer was going. Because their major customer was moving to Uganda, the banks followed to service the customer. Now, without liberalization, a customer cannot, or a brand cannot get out of its borders because the banking system may be limited. So liberalization also opens opportunity, not just for the banking sector, it will open opportunities for other local brands to expand into Africa to complement Ethiopian Airlines as well. So for me, that is an opportunity that opens up for Ethiopia as a country, that more of your local products will become visible on the African continent and within East Africa.
So the role of government is policy makers, regulators. is really quite important when we see the launching and the progress, the development of a successful financial sector, stock market, and the like issues. So how do you explain the role the government is, your respective governments made when you launched the securities exchange and opening up of the finance sector? Can we start with you?
I think we've really enjoyed government support over the years. The real thrust of the reforms came in the early 90s when the government liberalized foreign investment regulations. So up to 1994, you had to be a domestic account, but then we opened up to the foreign markets, and we saw a boom in the markets. So the markets grew so fast. Today, Kenya has got about, Nairobi Securities Exchange has got about 70% international investors trading in our market. Now, you may argue that, okay, what does that do to your market? Does it create swings? When they go away, the markets come down? It is true. But overall, we see more growth, more activity in the market because we have got a lot of foreign relationships, and that has really been helpful. But so the government has given incentives. Now, some of the incentives the government has done to encourage international investors, they allow foreigners to trade in Kenya without taxation. So we don't have capital gains tax, we only have tax on dividends. The second thing is that you can actually own almost 100% of a company in the market, other than the strategic companies. The third thing is that we have no exchange controls, so you can come and sell easily. So that has helped increase the value of the market and really encourage listings. So to an extent, government is a critical enabler to transform any markets. In Uganda, for instance, the government policies have been helpful. That's why you find the telecommunication companies are going public. MTN has gone public. I'm told Airtel is going public. Now, without government interventions, nobody will bother. So I believe that government should play a role in growing capital markets through policies that enable or encourage listings in those markets. That's how we're going to change this economies.
I mean, we can't emphasize this enough, that government is, the government vision for the role of financial sector and capital markets is vital for how they will thrive. For Uganda's case, we have, the president has put together a presidential CEO forum, which meets on a quarterly basis and brings together the chief executives of key businesses in the capital markets and financial sector. And they share ideas on what else, on how best to improve the Ugandan financial sector and capital markets. And we also have the regulators, the central bank, the insurance regulator, capital markets. They also have a forum where they meet on a quarterly basis to discuss financial sector matters. And then we also have the governors forum, which is East African wide, and it also meets on a quarterly basis. So you see that within East Africa, within our local markets, there is government effort to show that they are leading, they are driving the change, and then the private sector is following as well. And we're also giving the confidence to foreign investors to come and provide foreign direct investments, but also portfolio flows, investing in our local bonds and stock exchanges.
Okay, what recommendations would you forward for the major finance sector actors in Ethiopia for a successful stock market and also for a successful opening up of its finance sector?
I think the first thing that you need to do is have the right regulatory framework. Put together all the components that will provide the right infrastructure for the market. So have a strong capital markets authority that has got all the best all the rules and regulations and licensing regulations for all the players. I was happy to see the CEO say that they are also creating a market that conforms to international standards. What he mentioned about IOSCO, which is the international organization for all security exchanges. Be a member of IOSCO, so you bring in place that particular regulatory framework, and then make sure all the other components, the exchange is created, again, using international best practice, so that you have a strong exchange. And then all the players, the brokers, the investment banks are also properly set up. So that overall ecosystem development is critical. So that's one end of it. The other end of it is invest education. Start doing invest education. Start educating people about what's the value of investing in shares, in bonds, etc. Bring that knowledge gap, narrow it, so that they're able to understand how markets trade, how markets operate. So that when you start the market, you have got both the ecosystem in place, you have the investors ready, you have the companies that are ready to list because they understand the whole framework. So I would focus on those two things. Create the ecosystem, start the investor education as a way to start.
My only compliment there would be on incentives. Incentives are very, very vital in building both the domestic savings, bringing them to the capital markets, but also bringing in foreign investors. Issues to do with your taxation. Is it too high? Is it punitive? Is it competitive across the region? Because for a foreign investor, they have choice. They can invest in Nairobi, they can invest in Kigali, they can invest in South Africa. Why should they come to Addis Ababa to invest? So you would like to create incentive and an environment that is competitive when compared to peer countries. So that's something that could be of help in how we attract investors to our markets and bring in capital. And the other thing that I could maybe top up with is that there is the Africa Financial Market Index, which is run by Absa Bank, which compares a number of Africa countries on how we are organized in terms of our financial markets and capital markets. So in terms of doing our reforms, to know that our reforms are doing well, we will following that index and following how we are measured against Senegal, against Ghana, against South Africa, Mauritius, will give us an idea how far behind we are and what else we need to do to catch up to create a more vibrant market. So these are all things that are available as we chart a way forward that can help you have a clear roadmap to build a very strong Ethiopian capital markets and financial sector.
Jeffrey Odundo, CEO of Nairobi Securities Exchange in Kenya, and Alan Luatebe, Director of Investment Deposit Protection Fund of Uganda. I really appreciate the explanations you have given us on how Africa should withstand or prepare for the global dynamisms in finance sectors that's going to affect its finance, and also the recommendations you gave for the Ethiopian finance sector actually so that Ethiopia can have a successful launching of its stock market exchange and also opening up of its finance sector. I really appreciate. Thank you so much for joining ETV Special Edition.
Thank you.
Thank you for having us.
Dear viewers, this is ETV Special Edition, and this has been the conversation with Jeffrey Odundo, CEO of Nairobi Securities Exchange, and Alan Luatebe, Director of Investment Deposit Protection Fund of Uganda. Thank you so much for joining me. See you another time.